Hello, Michel.
Hello, Muriel.
The U.S. Central Bank just published the results of its banking stress test, and there's one big surprise. Citigroup did not pass the test. What message should we retain?
I think there is a sort of political message here. The Fed said to the banks, when things were nasty, we were next to you, we were cool. Now that the things are going better, we need to see higher requirements in terms of equity ratios. And for Citigroup, the message was clear. You have made nice profits. You decided to give the profits to dividends or to share buybacks. Now you have to raise equity ratio.
So the other conclusion, however, is that the U.S. banking sector is safe.
Yeah, definitely, because only one bank missed the test. So creditors and investors should be confident in the system.
And Europe, by comparison?
Europe is lagging because the European Banking Union will happen only towards the end of the year, and the supervision and the assets tests by the central bank will be made only at the end of the year. But I suppose that for credibility reason, we'll have one or two banks missing the test as well.
But contrary to the US, European regulation has pushed for higher equity ratio, but credit growth did not come. Why is that?
That is true, because the banks in Europe have decided to reduce the risks. So they've decided to not lend money to the small and medium companies. And rather, they've decided to lend money to governments by buying government bonds with a higher yield. And the money has moved to the government rather than going to the real economy.
So what should the European Central Bank do?
The ECB cannot change its attitude. The ECB will maintain the requirements on the equity ratios. But the ECB can do two things. The first thing is to lend the money directly to the SMEs. Or the second possibility is to do like the Bank of England, lend the money to the banks with a condition saying to the banks, you can lend the money, but only to the SMEs, and you're not going to buy again government bonds.
In these conditions, will the euro finally weaken?
Yes, normally, because if you stimulate these small and medium companies, they will invest money, they will stimulate economic growth, and when you have a higher economic growth, normally you increase the imports as well. And by increasing the imports in the Eurozone, that will reduce the massive trade surplus which has been accumulated for the last 2 years. And when you have a trade surplus which is diminishing, that will penalize the value of the euro.
And on top of that, Germany seems convinced by this new policy.
Yeah, definitely, because Germany, which is a very big export country, 30% of their exports are directed to the emerging countries which have now a lack of growth. So Germany is suffering a bit on the export side as well. And Germany would like to see the euro weaken to stimulate the exports toward other countries. So that is the reason why even now we see the Bundesbank saying to the ECB, move and give the money to these small and medium companies.
So in conclusion, we should remain positive concerning European markets?
Yeah, definitely, because these markets will benefit from this new change of attitude of the ECB, and particularly mid-cap companies located in these southern countries.
Thank you very much, Michel.
Thank you, Maria.